All right. So have you ever looked at like all your business dealings in China or with China and kind of wondered, are these relationships actually considered related parties by like the Chinese tax authorities?
Yeah, I mean, it's definitely maybe
It's a question that could have a huge impact on your tax compliance, especially when we're talking about transfer pricing.
huge. Yeah, yeah, absolutely. And as you probably know, transfer pricing regulations basically aim to ensure that, any transactions between these related parties are conducted at arm's length, just like they were between like totally independent entities.
Right.
So if you get that related party definition wrong, you could be in for some pretty significant tax implications,
Yeah.
maybe even some penalties. So for this deep dive, we're going to focus on a key document that outlines this definition according to China's enterprise income tax law. And we're going to try to give you a really clear understanding of like all the crucial criteria that are involved here.
Yeah. Okay, so let's unpack this thing. The starting point for, I guess, figuring out who qualifies as a related party in China is the enterprise income tax law and its implementation rules. And our source highlights that these initially set out three kind of broad conditions. The first one probably comes to mind for most people: direct or indirect control in terms of like capital operations, purchasing, and sales. So if one company has significant sway over another in these key business functions, that's a primary indicator, right, of a related party relationship.
Yeah, exactly. I mean, just think about it. If one entity can just dictate the major decisions of another when it comes to their money, how they run things, what they buy, what they sell, I mean, that suggests a level of influence that's just way beyond a typical like independent business relationship.
Right, yeah.
And the second condition in the law, it broadens the scope a little bit. It looks at direct or indirect control by, get this, a third party.
Yeah.
So even if two entities don't directly control each other, they can still be considered related if they're both like, under the thumb of the same third entity.
Okay, that makes sense. It's like, if you've got two suppliers who seem independent, but then they both answer to the same parent company.
Right, exactly.
Even if they don't really work with each other that much directly, it's that shared control that links them.
Yeah.
And then that third initial criterion is pretty broad, other related relationships in terms of interests. And that just sounds like it could get, really murky.
Yeah, it is a bit of a catch-all. So to provide like more specific guidance, the State Administration of Taxation, the SAT, they issued public notice 2016-42. And that notice really fleshed out those initial broad strokes from the law, with much more specific criteria. And probably most importantly, it established like concrete ownership thresholds in a lot of areas. So this is really the key to getting a detailed picture of how China defines related parties when it comes to transfer pricing.
So that SAT notice provides the fine print.
Yeah, exactly.
Let's get into those specific criteria. The first one that's mentioned is prescribed shareholding. What does that mean for, somebody who's listening to this?
So this one is pretty clear cut. If one party, directly or indirectly, holds 25% or more of the shares in another company.
Okay.
Or a common third party, again, directly or indirectly, holds 25% or more of the shares in both companies, then those companies are considered related parties under Chinese tax law. It's interesting because our source points out that Singapore also uses that same 25% threshold.
Oh, okay.
Which I guess could be a useful point of reference. But as we're going to see, the rest of the definitions aren't exactly identical between the two countries.
Gotcha. So a 25% ownership stake, and it can be held directly by one company and another, or indirectly through a chain of ownership.
Right.
Or if a third entity owns a significant chunk of both companies, then that's a key trigger.
It is, yeah.
Okay. What's the next specific criterion we should know?
So the next one shifts the focus from like just ownership to who's really in control.
Okay.
It's called control and management, and basically it looks at, who's calling the shots.
Right.
The rule says that if more than half of the directors or senior management of one company are either appointed by the other company or assigned by the other company.
Okay.
Or, get this, if the same people are like simultaneously directors or senior management in both companies, then they're considered related.
So it's not just about who owns the shares, but who actually is making the decisions.
About control, yeah.
And that definition of senior management, it's pretty specific, according to our source.
It is, yeah.
It includes secretaries of the board of directors at listed companies, managers, deputy managers, financial controllers, and anybody who's named as senior management in the company's Articles of Association.
You got it. The SAT is being super precise
Yeah.
in identifying like who those key decision makers are.
Right.
This rule also has like a parallel condition.
Yeah.
So if more than half of the directors or senior management of both companies are appointed or assigned by the same third party, that also creates a related party relationship.
Okay.
So again, it comes back to that central theme of a shared controlling influence, even if there's no direct ownership between the two entities.
Gotcha. So even if like the shareholders don't really overlap that much, if like an outside entity is basically staffing the leadership of two separate companies, those companies could be related.
That's right. That's right.
Now, we talked about that broader other related relationships of interest category from the initial law.
Yeah.
How does the SAT notice give like more concrete examples of what that means?
So the SAT notice actually breaks it down into several different scenarios. One key scenario is when one company holds shares in another, or a common third party holds shares in both companies, and the business activities of one of those companies, things like their major purchases or their sales, the services they provide or receive, all that's controlled by the other company.
Okay.
So even if this shareholding doesn't hit that 25% threshold, if one party has a lot of control over the other's business, their core operations, they can still be considered related.
If one company is basically saying, this is how you're going to run your business,
Right.
then that's not really arm's length.
Right, exactly.
What's another way that the SAT notice clarifies these other relationships of interest?
Well, another important one involves like financial dependency,
Okay.
specifically through debt.
Okay.
So if the total amount of debt between the two companies equals 50% or more of either company's total paid-up capital, or if 10% or more of one company's total debt is guaranteed by the other company, they're considered related.
Oh.
However, and this is really important.
Okay.
There's a key exception. This doesn't apply to like loans or guarantees that are provided by independent financial institutions like banks.
Right. So normal financing from banks doesn't count.
Exactly.
What about what's the next scenario?
The next one focuses on reliance on intellectual property. So if one company's business, their operations, they depend heavily on proprietary rights, like patents or trademarks or copyrights provided by the other company.
Okay.
And there's also some kind of shareholding link between them, either directly or through a common third party, then they can be considered related.
So if one company's entire business model relies on like technology or branding that they license from another company, and that other company also owns part of the first company, then that could mean they're related parties.
You got it. This highlights how important these intangible assets can be in defining these relationships.
Okay. And then our source also mentions natural persons' familial relations. How do personal connections play into all of this? It sounds like it could really broaden the definition.
Yeah, it does. It does. This rule states that if two people are closely related, let's say spouses or direct relatives, like parents and children, siblings, or even in other relationships of like custody or family support, and each of them has one of those relationships we've already talked about, shareholding, control, significant debt, reliance on proprietary rights, but with a different company,
Okay.
then those two companies, which, on the surface might seem completely unrelated, they can actually be considered related parties.
So, okay, hold on. If say my brother, he controls company X, and then my spouse has like a major debt arrangement with company Y,
Right.
then even if company X and company Y never interact, they could be considered related by Chinese tax law because of those indirect familial links.
Yeah.
That's pretty far-reaching.
It is. It's about, thinking beyond those direct corporate connections and considering how those personal relationships might actually create situations where, you have control or significant influence, but it's happening indirectly.
Yeah.
Businesses really need to be aware of those personal connections of, their stakeholders.
Wow. Okay. And then finally, we've got the catch-all provision, which is two parties substantially have common interests in other ways. Now, that is incredibly broad.
It is, yeah.
How would the Chinese tax authorities, how do they interpret this?
Well, you're right. It is super broad, and the SAT notice doesn't give us, any specific examples here.
Right.
But I think including it in the notice really emphasizes that the Chinese tax authorities want to capture a wide range of relationships. Even if they don't perfectly meet those other defined criteria, they might still indicate a significant level of like mutual interest or dependency
Okay.
that could lead to transactions that aren't conducted at arm's length.
Okay.
Just a reminder that these rules, they're meant to be pretty comprehensive and to prevent tax avoidance schemes through all these closely connected entities.
It sounds like the Chinese definition is very thorough, covers a lot of ground. Our source does mention a few key differences between the Chinese definition and how Singapore defines a related party. What are some of the biggest distinctions for our listener?
So one of the most notable differences is that, unlike Singapore's definition in this context, the SAT notice doesn't specify particular shareholding thresholds for those other relationships of interests that we talked about earlier. Things like control over business activities or debt relationships or reliance on IP.
Right.
It also doesn't lay out any specific shareholding criteria when it comes to that natural person's familial relations rule or for that broad catch-all provision.
So that 25% shareholding, that's a clear trigger in itself.
Yeah.
But when we move into these other areas like control of business dealings, significant debt, dependence on intellectual property, it seems that just like having a shareholding link, by the controlling party or a common third party in the other company, that might be enough to establish a related party relationship, even without needing to hit a specific percentage.
Exactly.
And the same goes for those family connection scenarios and the catch-all.
Right.
There has to be a shareholding link somewhere in the chain, but the SAT notice doesn't say what the minimum percentage is.
Right.
That's a pretty important detail to understand.
Yeah, absolutely. I think it suggests that in those other relationships categories, the emphasis is maybe more on the nature and extent of the control, the dependency, the family link, and just having any kind of shareholding, any ownership interest acts as an extra indicator of a potentially related party relationship, regardless of how big or small that shareholding is.
Okay.
Which is different from a purely ownership-based definition. So yeah, they both use that 25% threshold for direct ownership, but the thinking behind it and the broader scope, it can really vary between the two countries.
Yeah. Being compliant in one country doesn't mean you're good to go in the other.
Exactly.
Okay, so to sum all this up, the main takeaway here is that China's definition of a related party, for transfer pricing, it goes way beyond just majority ownership. It's a very detailed definition that looks at direct and indirect control through capital, operations, but also control over day-to-day management, the extent of financial dependence, reliance on key intellectual property, and even family relationships between the people involved.
Right.
And the 2016 SAT notice, that gives you all those specific details and thresholds that really help clarify the broader principles in the enterprise income tax law.
It really does. That SAT notice, that's your go-to if you want to understand all those specific triggers for related party status.
Okay.
It underscores how important it is to look at the whole picture, not just who owns how much, but who's making the decisions, who's got the financial leverage, and what personal connections might be creating, related party dynamics.
Yeah, this has been a really good in-depth look at this. So for you, the listener, if you're doing business in or with China, really understanding these rules is crucial if you want to navigate all the complexities of transfer pricing and make sure you're compliant.
Couldn't agree more. And it really makes you think critically about your business structures and those cross-border transactions that you might be doing.
Yeah.
Think about those entities that you might not automatically think of as, related. What are some less obvious connections? Maybe through shared minority shareholders or, supplier or customer dependencies or, like we said, even the family networks of, your key personnel.
Right.
It's definitely worth looking closely at all those relationships through this lens to avoid, any tax issues that you might not be expecting.
That's good advice. All right. Well, that's it for this deep dive.
Yeah, thanks for listening, everybody.
Thanks for tuning in, everyone.